Good morning, everyone. Welcome to Admiral Markets. My name is Chris, and we're going to take a look at strategy on the Forex pairs and use technical analysis to make judgments of what's going on in the market. Before we start taking a look at the live charts, though, be aware that this webinar is intended for a global audience and may not be suitable for everyone. To find out more information about that and other conditions and details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only, and by continuing watching this webinar, you agree with this disclaimer. All right, today we're going to focus on strategy. Yesterday, we focused on applying discretionary technical analysis, and today it will be more of a system-oriented webinar. Let me grab the calendar here, first of all, before we look at the charts. And we have at the moment let's see, where are we now? Pound news coming up, big one this time, unemployment rate and the claimant count change. So that is something to be very cautious of. We got bank interest rate decision. So I don't trade that particular currency when there's a big interest rate decision. That's always a big one. So no CAD for me today. Let's see, deadline for Greece to enact reforms. But as far as I've seen quickly on the news, there seems to be no issue for Greece to get the reforms passed through its parliament. So, but anyhow, you never know. So those are all things that are coming up. So let's take a quick look now at this. I wanted to show you this heat map. I showed it yesterday, but I didn't show kind of these two parts that well. I think this is pretty cool because this is the last 2 days of movement, and it compares each currency pair. It compares the change and the volatility, and then compares it of that currency pair to the previous day. So you can see if there's an up momentum of this particular graph, or if there's like a decrease. And these particular currencies didn't move too much, as you can see. So basically, they had low volatility and they had low change, and they still stayed in the same group. So not so interesting. This one, as you can see, it actually increased in rate of change and volatility. That's the pound yen. And actually, all these here are mostly pounds. They move the most. Now, unfortunately, today there's a pound interest rate because the pound would be from that point of view, from a range and the volatility point of view, a very interesting one to trade. And actually, we did talk about the pound yesterday, and those trades I think worked well. We can take a look at those in a second. Now, so from that point of view, it's fortunate that the pound has interest rate because they are kind of in the most interesting group. There are some kind of middle kind of pairs here that might be good second choice, like Euro New Zealand, Euro odd here, a Euro Swiss yen. What is this one? Euro CAD, dollar Swissy. But as you can see, the more we go this way, the less kind of volatility there was and the less change within the last 2 days. So I think that's a pretty cool way of looking at things. You can see the range of the pound by far exceeding anything. The number 2, though, good to note, is by a slim margin the euro. Alrighty, let's take a look at the currency pairs. Good morning, Caitlin and Beverly and everyone else. Let's take a look, first of all, at perhaps the euro dollar. Euro dollar had an upside yesterday. Was expecting the bounce, or anyhow, I said that I don't like the downside because of the fact that support is so close by, and the R2R space didn't seem very appealing, even if it would move into that zone, and it didn't. This hourly bar, when we were looking at the webinar yesterday, was the last one, and we had a couple of hours upside from top to bottom, about 120 pips. Now, that of course is not bad, but actually stopped pretty soon in comparison with this downside. Now, is this for those that like waves in ABC? And is this upside, or is this still perhaps a 1, 2, 3, 4? Now, I didn't really decide yet which system we might want to look at today. Does anyone have a preference, actually? Any preferences out there? From a wave perspective, this could still be a wave 4, although it's a pretty deep wave 4. Still, in any case, whatever the fact is, if this is a momentum, which it looks to me like a momentum, so I don't think it is a wave 4. Still looks like a potential ABC potential here, and a zigzag, and a pretty deep fib, but quite common to see that at the 78.6 fib. So from that point of view, I think still relatively in a bouncing spot. In any case, the reward to risk here, the risk is very small when using a stop loss below the bottom, and relatively a big reward potential. So from that point of view, even if the trade only, were to succeed, even only 1 in 4 times, it should be generating profits because of the big R2R. So upside, I think, still makes sense. Now, let's take a look at the 50-minute chart. Yesterday, I was looking for 6 bars, not breaking, and that was this bar. So, that could have been an entry, or perhaps maybe after this consolidation zone here, but that only gave it a bit of a smaller spike after that. Or this fractal, perhaps. Those were potentials for the euro dollar yesterday. Now, on the 50-minute chart, this looks like a pretty good momentum. Of course, that doesn't mean everything, because we do know that we are closer to support, and this is momentum too. So it's kind of like, it's a bit of a toss up here, which one is better. When I look at the hourly, I only see 2 bars here, so that is a bit shaky, not so strong. I'd like to see 3 bars. So I think for the hourly, this particular fractal is pretty important at the 109.90. If price really pushes through 109.90 and goes below 109.75, I would say, or maybe even this bottom, 109.65, then it looks like we have maybe some potential. How much? Let me take a look at the 4-hour chart. Maybe down to 109.20 for 40, 50 pips here. Not much. Upside, let me put on the fib sequence here. Yeah, we only managed to get to the second level here, which is not a very deep move as yet. All right, so we're not really in a trending mode as yet. But in any case, let me check the 15. I think for the 15, I think for the downside, it's clear. This support level is important. For the upside, I probably want to keep an eye on this fractal right here. We already have 3 bars to the upside here. It's a small momentum, but it could be enough. Now, this is not a fractal officially yet, because it has 5 minutes to go. Oops. It has 5 minutes to go before this becomes a fractal. So from my perspective, if 5 minutes from now this candle closes, this could be the breakout level for upside on a lower time frame, and this on a higher time frame for downside. So that's how I would look at it from a discretionary point of view. All right. Now, perhaps I don't see any preference for a system. Maybe this time around we can discuss Fibonacci system. Although for the euro dollar, maybe that's not a good choice because it's very choppy. Um, and yeah, but if we do, and put this fib on this first swing high, swing low, let's see. We actually already reached the target here, I guess. Just maybe missed it. I would say that's a hit. No, that doesn't really give any value here. Let's see. It's probably too choppy to really use fibs. Maybe only to the downside, but even to the downside, maybe not a good example to take fibs. Let's take a look at fibs maybe on the pound dollar instead. So I'll go back to the euro to see how it breaks out of this range. The 78.6 fib is basically the square root of 61.8. So, ooh, great. I was actually on my mind to ask if anyone did take the pound dollar, pound yen, or pound odd. Those were the trades that I was discussing and found the most interesting. And the pound, indeed, causing all three to do very well. And Beverly managed to get 128 pips. Awesome job. Great stuff. Beautiful amount of pips. I caught 112. So if anyone is keeping track, Beverly beat me there by 16 pips. Haha. Great job. Anyone else, by any chance, that took any of those three? Anyone take any of those three trades? If you didn't, I mean, don't feel bad. I don't want to. Oh, Bjorn is still in. Wow, that could be a record setter there. Let's see if it could break the 128 most likely then. Awesome job. So Bjorn took it as well and is still in. So two traders at least. Caitlin took as well, but on a different, not based on our analysis together yesterday. Okay, cool, but still great trading. Anyone else? Any third or fourth person out there? No. Okay, no problem. Maybe next time then. Pierre got pound out 35 pips. Great. Now it was a bit tricky because of the news event, but I do think that after the news event there were opportunities. Let's maybe start with the pound dollar first of all. The pound very quickly here was talking about time factor that it didn't break this bottom. Now it actually did by 0.4 pips, which I missed at that time. So I actually that's enough for me to consider this not this broken and actually the time factor to start counting again. Anyone who's not clear about time factor or any other concept, please let me know. And actually it broke here. And the sixth candle actually was 2, 4, 5, this one, which actually was ironically enough. You lost sound? Okay, let's see. Does anyone hear me? Okay, great. Primos, do you hear me? Let me write them quickly. All right. So, and yeah, the uh, let's hope Primos gets the sound back. So this one was the best actually from a time factor point of view because at the time of the live webinar, I actually didn't see this 0.4 pip break and this 0.3 pip break or something like that. I guess just because it's difficult to combine really, hosting a webinar and still trading and being, focused on both is kind of multitasking, and it does kind of lead to maybe the neglect of that. I do consider anyone who was wondering this a break of that, and therefore the count to start again from here. Now at that time I considered actually the sixth candle to be somewhere in here. That's why I took it there. But actually that was a bit too early. So I just wanted to mention that. In any case, the sixth candle was officially here, therefore, but anyone who did take it here did, or after the news event, which was somewhere in here, did prove to be a good trade. I exited according to my own time factor rule, but because of the strong momentum, I'm not surprised to see a few follow-throughs, to the upside. So just to be clear on the rule and that. But yeah, all three entries here after the news or according to the time factor would have led to this upside, and well, depending on the exit and the trail stop, I guess a lot of pips. So that was one. Now for the moment, the pound unfortunately has a news event. It eventually not only bounced off this 50 fib as we were talking about yesterday, but moved up to the minus 272 target and just recently reached that. So that could be a bit of a pause moment here at this significant target. Now, the thing is, with an interest rate coming up, it's difficult to tell what will happen now. From a technical point of view, though, consider a minus 272 target something that we could see a reaction to, and then perhaps a continuation up to the minus 61.8 target, which is the main level to I think price will go to, the main target. So due to the target, due to the news event, difficult to trade the pound at the moment. And I guess I will have to, personally, I will look after the news event to see how things are shaping up, whether I will take a long. If the news event sends this right to the minus 618 target, then no way for me to enter. If it sends it lower and then I see a bottom somewhere in here, then there is still a chance for me to take a long to the minus 61.8. It's that simple, I think, from my perspective. Obviously, we're now in a bullish breakout. This trend line has been broken, and price did get a major bounce at this trend line, as we talked about yesterday. Let me put on the moving averages for a second. All right, let me put on the fib sequence here, just to get an idea how far things have gone. We're above the third level. So from that point of view, yeah, it might not even be the minus 618. We might go even further. I mean, once you get above the third, there's space to the fourth. Once above the fourth, there's space to the fifth, and even maybe the sixth. So this could be, to make sure that I'm clear, this minus 618 target is actually, just kind of a conservative target. It is the minimum I would expect of a zigzag. Now, if it's a bullish bounce and really gets momentum, it can go a lot further than that. It could actually start moving. Oh, sorry about that. It should actually start moving a lot further because price did bounce off this 78.6 fib here, and that target is all the way up in here. That's how far it could go. Now, the conservative target is obviously the zigzag of the smaller fib, the minus 61.8. But if it does get legs and it does start to push, then all the way at 161.20 could be how far it goes. And if then we use the fib sequence tool to understand where the targets are, Then, oh, that's the wrong one, but anyhow, this is the 4-hour one. Then you can see that if we break above this zone here, maybe 157, 157.50, then this wide open space is here on the 4-hour chart. Let me check now the hourly sequence, and same thing. As far as we move away from these bottoms, we could see acceleration if we manage to break out. All right, so anyhow, back from that point of view, 50-minute chart. Has a bit of lingering divergence between these tops. Let me look at the Camarilla quickly. H3 close by. I don't see any reason to go long here. Despite the good space to the upside, I still want to pull back maybe to L3, for instance, could be already enough to the pivot. And a bounce there would be interesting for a continuation up to 157.50 as a conservative kind of idea, perhaps more after that. So that's my 2 cents. Now it might, push through the H3, I don't know. But with a news event like interest rate, I'm definitely not personally trading that. That's just how I look at it. But after the news event, depending on how things go, pull back here or here is interesting. Or if it does break like this, perhaps a pull back to the H3 as well. So these blue circles. All right. So let me take a look at some questions in the meantime. Does anyone have a particular currency pair in mind? In the meantime, maybe you can drop your favorite. And then it said that the first touch to support and resistance or trend lines is the more profitable. How does that go with the time factor filter? Let's see. Let me use this template. Well, let me think for a second. The first touch, I'm trying to make sure I understand. Probably I'm not 100% sure if I, can comment on that without knowing for sure what Nenad meant. That's the problem. I'm trying to figure out what he meant, but because from my perspective, maybe I can just explain what my perspective is, but that doesn't, I don't want to necessarily like say this is an opposing view of Nenad or something like that. But how I look at it, first touch depends. I mean, this is maybe the second touch here. This is the first touch. This is the third. There are multiple touches, and they all have their kind of value and support on this trend line. Mm, and I don't think it necessarily has to be the first touch. It really depends on the bigger time frame, I think, because market likes to move up and down a lot. And more often than not, I think there's more time on our side than we normally think. Maybe that's how I would formulate it. For instance, let's see here, for instance, maybe to give a specific example, here we had a first touch, but even if we wait 5 to 6 candles to four, you're somewhere in here. Now, yeah, I mean, yes, it's about 36 pips worse, but I mean, then again, it did, depending on where you got out, of course, it did move up a lot as well. So the taking a first touch here is obviously the best price, but there's a lot of risk involved because in the sense that now we can see price stop there, but this trend line or fib, there is definitely the chance the price could stop there, but not always do we see a reaction to a level that we think is important. Now here there was a 78.6 and a trend line, so perhaps from that point of view it makes sense, and use a stop loss below the 886, but or bottom. But I don't think it's the only way of trading. It is possible though because there's a lot of good stuff here indeed. But momentum is down, and waiting for momentum to finish doesn't necessarily have to be a bad setup too. And you can use therefore this bottom already as a stop loss. That would be the advantage. If you have any follow-up questions, let me know. Let's see. The break of 15, the break of 0.5 pips. What I meant with that is my time factor rule states that I am looking for a lack of a break between 5 to 6 candles, right? So in this case, the I deleted my chart. All right. So let's see. This is momentum. And as soon as this doesn't break, this bottom, 5 to 6 candles, I'd say 6 for the moment. 1, 2, 3, 4, fifth candle. Fifth candle actually did go below it. Now, it was small. It was only 0.4 pips. But technically, I do consider it enough. So therefore, I would restart here at 1, 2. Then again, we got a break. So I would restart 1, 2. So that's what I meant. It did break a bit, enough. For a 50-minute chart, any tenth of a pip is enough, in my opinion. Now, maybe if I do more testing, I will notice that putting the board at 1 pip is better, but then we're going into quite some detail, which I haven't did any study on as yet. Weekly charts. Yep. Yeah, definitely this is holding it back, but this is holding support. So we're getting into a crunch situation with the resistance and support like this. And it could go both ways. It can break below it. It could still pop up a bit to the 61.8 fib and then move down. Which fib is that? I'm talking about this one. If respected the 50 here, it still could go up to the 61.8. But good observation, Björn. I agree that the moving averages are playing an interesting role on the weekly. Doji on the 4-hour chart. Let's see. Oh, it is probably the euro dollar doji, or is it the pound dollar? GU. Okay. Yeah, I personally wouldn't take the long just because of the interest rate. I don't like interest rate days personally, so I can't really comment on that because I just wouldn't trade it here. I prefer a bit of a pullback anyhow, personally, or a clear, good momentum to the upside and then a pullback. Um, maybe this is already a momentum, but I mean momentum a bit later in the day. Mm, let's see. I think the first touch is more likely to have at least a small bounce. Therefore, you can scalp a few pips. Yeah, a small first bounce could have that, but you need to be you need to be sure about that level. I think that They're definitely, traders with experience that take these bounces right at the bounce level. And it is probably, in that way, the most efficient, maybe I don't know how to say it, probably let's say you have the advantage that it's the first indeed point, and you're going to get a good reaction. But it's all about knowing or having the experience to judge that that particular spot has a good chance of a bounce. And I think that the less experience a trader has, the more difficult that is, because um, they just don't have the experience that to judge what is very important support and resistance. A trader that's been trading more than 10 years will be able, for sure, more than 10, maybe even more than 5, depending on how fast one, tackles and has experience in it. But in any case, is able to judge indeed that with a higher probability. But if one doesn't have that experience, then trying to do that, I think, could be dangerous, because often then levels are chosen that are not relevant enough and not important enough. And then a trade is taken against a falling knife, against the momentum. So from a learning perspective, waiting for a reaction has its advantages until one has that experience, basically. Alrighty. Let's see. For time factor, sorry, apologies for the length here of the Q&A. I didn't attend it, but I'm glad for the comments. I just hope that some are not too bored by it. Please, if you would like to, please mention perhaps a pair, and we can take a look at that. Okay, I'll just finish the questions that are now present, and then I'll continue. Okay, there's some audio issues with Caitlin. Oh, hello, does anyone hear me? Hi there, everyone. Sorry about that. There was some audio connection problems there, and it had nothing to do. I mean, I couldn't do anything about it. It was just the software that was saying, trying to connect again. So thanks for your patience. I don't know why, but what happened. But anyhow, I'm back, hopefully. Sound is back. Let's see, Jen. Yeah, that sound is back. Good. Yes. Yeah. So sorry about the lengthy Q&A. I like the questions. I know that some maybe are waiting for the next currency pair. So if you have a preference, let me know which currency pair you would like to look at. I'll take a look at these last questions, and then we can take a look at the next pairs. But I appreciate the comments. The time factor, I'm not sure what you heard or didn't hear. The time factor is indeed 5 to 6 candles not breaking the top or bottom. If it does break the top or bottom, I reset the count after that whenever it stops, indeed. So for instance, here, momentum, here we have 1, 2 candle, and then we break the top. So it's again good to go. Here's the first candle, then break the top, so it's good to go. Here again, there's 1, 2, 3, 4, 5, 6 breaks, so again, good to go. 1, 2, 3, 4, 5, 6 doesn't, so then that's the end of this momentum. That was maybe a bit quick, but I think, Beverly, that you got that probably. So 5 to 6 indeed, and if it does break, I reset the count. Yeah, Caitlin, good observation. Definitely, whatever you feel more comfortable with, go with that. And depending also on your experience, probably you would like to test, try out, I'd say both ways. Both could work out as well. So something for you to test personally. Good observation. Let's see. Let's take a look at the dollar yen. Okay, Pierre has a suggestion. Okay, with the time factor rule, I meant that I'm looking for a bottom break or a lack of a bottom break if I want to see the momentum ending. The momentum still continued here technically because of the break here. Does that make sense? So due to the fact that it posted a new low, this momentum here is technically, officially still in play, although the break was very small. And something it was so small that I didn't even see it yesterday. All right, let's take a look at dollar yen. And because of that break, the momentum was still in play to the downside. Dollar yen. I said yesterday that here momentum is over and that we could see a correction. Now on the dollar yen, corrections can be very choppy, can be very bull flaggy, and it did happen. We did have, let's say, a lack of momentum follow through. Indeed, that was the end. But now we're getting this kind of pattern, which looks pretty corrective. And therefore, a break to the upside seems pretty a decent chance, I think. We already broke above these fractals, and we had a sizable correction, in my opinion, which means I think we're in a decent breakout territory. Now, from a 4-hour point of view, it's getting actually a bit too long. The breakout should have happened earlier. It seems like the breakout took too long, in my opinion. Let me take a look. 4-hour world, 2, 4, 6, 7th candle didn't break this top yet. If there's any pair that seems to have its own kind of sense for this is yen. So, sometimes it does tend to break my rules a bit on that, but technically, this is the 7th. Oh, sorry, it's the 7th. So the 6th was bullish. So it could still happen in the next few hours, actually. 2, 3, 4, 5, 6. No, this is the 7th. I cannot count. 1, 2, 3, 4, 5, 6, 7th candle. No. So yeah, no. Actually, I wouldn't take longs anymore. It was too late. It should have happened in the previous 4-hour candle. So I would not take breakouts here. I consider now this not only a completed 1-hour momentum, but a completed 4-hour momentum, which means that now I wouldn't want to take the trade right in front of resistance. Now I consider this a major resistance, which means not only can I put the fib on for sure, and we had a 23.6 bounce, but I wouldn't want to trade it unless the price really shows a break of this top and on a lower time frame perhaps a correction back to that level. Alternatively, a move down to the 38.2 fib could be interesting, or 50 or 61.8. Yes, if time factor rule is invalidated by a break of the top, then indeed zooming into lower time frames and looking for continuation longs, I think makes sense. And in that case, it could very well be a 23.6 bounce, very shallow, and 124.60 could be the target. I wouldn't look for longs if price reaches the target. After that, I would be cautious because the target has already been reached. Now, odd USD didn't do what I was hoping for. It's made a consolidation instead of making a downside. That's why fractals are pretty useful as well to indicate whether there's a break or not. This fractal never got broken. I don't think I mentioned that yesterday, but something that is good to keep an eye on. And it's something that I do use, as you know, always on the chart. So always keep in mind that fractals are very useful for establishing a breakout. And in this case, unfortunately, it didn't break, and it made a rebound to the upside. Now, let's see. The 4-hour candle was pretty good actually, and it did turn into a bearish candle. So that itself was not enough in this case for a downside trade. I guess there's nothing that can be done. The dollar just weakened. Pound dollar was going up a lot, and the dollar had a lift against the Aussie as well. Now the pound dollar moved a lot more than the odd USD, so that's why the pound odd moved significantly in the pound yen too. But this trade didn't. This downside trade did not work out. I didn't take it myself, although I was interested in the potential to downside. I don't know exactly when I lost attention on it, but or when I decided not to take it. I guess when I saw these blue candles already. But ultimately, I think that the best would have been to keep an eye on this 1-hour fractal probably. Now, yeah, it's showing a lot of upside, in fact. Got a couple of good bullish candles. But not enough for me to make it interesting. So ultimately, I think that this resistance at 75 is still key. And support, well, maybe here at 70, all the way down at the bottom. Let me take a look at the daily. 1, 2, 3, 4, fifth daily candle. So I don't know. It has to be the next day or two, otherwise this downside momentum is over. So the downside momentum is still present on the daily. 4-hour is definitely not showing that. This fractal could become important right here. Let me renew the chart. This fractal could become important, but this 4-hour candle has to close. If it does, that could be the breakout level for downside. For upside, I don't see any trades at the moment. It is showing momentum, but it's slamming into 75. So maybe upon the break of 75, but I wouldn't trade it when it does break. I would keep an eye on it, but wouldn't trade it. The top at 75, is it shortable? That's good question. Let's see. It certainly is a level that's strong enough for it. It's a daily fractal too. We got on the hourly, I would say that at the moment we have an upside momentum in the hourly. So if anyone took a short here, great job. You caught the most likely top. If you're not in the short anymore, it's still possible as well, and it makes sense from a reward to risk perspective because it's anyhow a small risk and it's a decent reward potential. So from that perspective, it does make sense. If anyone were to use my time factor rule, then this is the fifth candle, which means I would wait for 1.5 hours to see if this top doesn't get broken. Or, well, that's a breakout again. Yeah. So anyone who wants to take a bounce trade off of this key level, I do see the merit of it, and I think it makes sense. The higher, the better, and the tighter the stop loss can be. The stop loss could be just above 75. Personally, I don't take many of these trades, so it's difficult for me to say, how successful this particular setup will be. But if you ask me, does it make sense from a reward to risk percentage, from a reward to risk perspective? I think it has definitely its merit. It's a trade though that I think will take time to develop. There's not a lot of movement here. So before we get the turn, it could take a while. Let's see if there's anything else going on. Let's see. The dollar CAD didn't go all too far yesterday, in fact, for me. And was a break-even one. Ultimately, too much struggle at this daily and weekly resistance level, which is not surprising. That should be expected. So that's not so strange. So not so, at the moment, the dollar CAD is too close to that resistance spot. Not that interesting. Kiwi actually here, 2, 3, 4, 5, 6 candles, didn't break this bottom, made a rebound off of this weakness here. Still pretty choppy on the Kiwi. And ultimately, of course, a good 4-hour downtrend. So if it does push through this bottom, it would be good, but that would take still a couple of candles still. I don't see it breaking in the next day. So I would probably wait till tomorrow for this break before I would take the break. So there's not. Let me continue. Hopefully, I'll find something more interesting. It's difficult with the cat having a what was the cat having again? I forgot. Interest rate and pound having unemployment rate. Sorry, pound doesn't have an interest rate; it has unemployment. I'm getting it mixed up. And yeah, still important. And still a level. Still a news event that I would preferably rather wait for. Now, especially because pound, I think, could make a retracement here at this point. Maybe that's even the most important, actually, because I thought it was interest rate. So, but anyway, CAD does have an interest rate, so I would skip it. So far, I don't see much interesting. Let's see if I can change that by looking perhaps at the euro yen. Quickly scanning a couple of charts here. Well, it looks like a good correction. It's maybe a small inverse head and shoulders here. Could be a breakout actually right now. Um, the euro dollar is still in a range, but does have some momentum here. So it seems like we have a fractal. These two levels, I think, could be the most interesting for the euro dollar. Euro yen, I think, could be in a breakout potential right now, in fact. There could be one way of trading it could be to wait for this break. Another way could be to wait for the break and pull back. Stop loss should be below this bottom here, about a 50 pip stop loss. Okay, so I'll punch that in. Stop loss will be about, I'll go about 10 pips above that for a breakout, 10 pips below it, making it actually more of a 70 pip stop loss. Let's see, I am looking for a buy at 136.20. Let's see. Now, a bit tighter stop loss could be used maybe at 55-ish. A better entry could be used as well, perhaps, if price, just by waiting for price perhaps to make a retracement somewhere, letting this maybe become a good hourly candle, for instance, and waiting for a retracement on the hourly and using the hourly candle as a low as a stop loss. But as a breakout, I think this is a bit better because of the space. But if one, and it's easier to show in a webinar, because waiting for an hourly candle would require probably the fact that this will be after the webinar. So this is a bit easier to show, but could be a breakout here on the euro yen. We'll take a look at the pound yen. Pound yen, probably the same thing. It had a good breakout yesterday too. Yesterday at the bull flag, and yesterday too, looking at 5-minute, 6-minute candles not breaking this bottom. That was indeed the signal for upside, and we got a good move up. Now at this moment, I would rather wait for a correction too. It's a nice channel, but with divergence and a news event, I'd rather wait for hopefully a pullback. Hi there, everyone. I'm back. Sorry for that. Again, got disconnected and took quite a long time before it got reconnected. I don't know why. It's very untypical. Not sure if it's the software or my internet. My internet seems okay as far as I can see, at least. Anyhow, so yeah, I would like. I mean, good upside, but would like to see some pullback here on the pound yen. Probably the pound odd, the same thing. Pound odd. let's see, yesterday was looking at this here, right? This bounce had a good upside. Got a steep retracement as well, or was that, no, I'm mixed up maybe. Yeah, this was yesterday. No, that was 2 days ago. Sorry, yesterday was here actually. Same point though. Had a good spike up. There it is. Had a good bounce here. And let's see how far it went. All right, it actually is taking quite a while. This is already in the ninth candle, which means it's in the correction 10th candle. I would still wait with the pound odd. That doesn't look set up in my point of view. Pound yen and pound dollar have been making highs and breaking highs, so those look more interesting. CNY is China, abbreviation for China. Alrighty. So far, euro yen seems the most interesting, and pound yen and pound dollar, but not maybe right now those two. And now we're getting into some exotics. The cat I'm not trading anyhow, so I'll skip those for the moment. New Zealand made a pretty sturdy downside retracement here, now bouncing a bit. I don't know, this is yen, Kiwi yen. I haven't taken a look at those for a while, so we'll have to start from scratch. But any other preferences perhaps for any pair in the meantime? Let me take a look at Pierre's question. No problem. I appreciate the questions. I just hope, I hope that people have patience as they wait for the pair. But I definitely don't mind. I like to know if you suggest to stick to a specific time frame depending on trade duration. Yeah, definitely. Yeah, if you definitely very important to, I think, to take a look how much time can you analyze, how much time can you look for a setup and keep an eye on the setup, and how regularly, and after that, how much time do you need to manage it, and you have to make sure that you can really implement what is on paper. So if if you can look at the charts once an hour, great. If not, then you have to adjust it so that for instance, if you're trading an hourly chart, then you need to keep an eye on the hourly chart, but you can't every hour. Then you have to go to the 4-hour chart or close the trade, or that's not probably very practical, but trade in the times that you can keep an eye on it. Definitely. The grid, yeah, I don't know. I guess maybe traders that like to see get an easier reference about the relationship of time and price, maybe. I don't know. I don't use it either, so difficult to say. Dollar CAD, yeah, we can take a look at that. Dollar CAD, actually we already did, but no problem. Dollar CAD, I think I said I skipped it or kind of skipped it a bit because of the bigger resistance right here. Plus there's a CAD interest rate, so heading into strong resistance at the moment. And I think we can see a bounce off that level. We have a daily pin bar here. Now, I wouldn't be surprised if it could still push a bit more above it. But ultimately, this double top region here, maybe 15 pips above it, 128.50 probably would be need to use, for as a technically correct reversal stop loss. The momentum and trend are definitely up, but we're running into big resistance, which means that I'm not trading it to the upside. If one is looking for reversal, let's see. this hook back could fail, and if it does, there could be downside. This is the fifth candle, which means there's still two candles to break this top, but let's see. If it does break this red line, it shouldn't break the green line. And a retracement is likely back to 126, 125. All right, audio is again lost, so I think probably the right time maybe to wrap it up. I don't want to annoy you continuously with all these audio sounds, audio connections. I don't know. I hope that next time it doesn't happen. In any case, thank you for your patience. I only want to mention that tonight, Ned is going to take a look at a webinar. He has a webinar. I forgot the topic. Let me take a look. Oh yeah, low volatility. Then tomorrow we're going to take a look at black swans. It doesn't say it in the headline, but that's part of it, at least looking at the news events and how we can tackle risk. So those two webinars still remaining this week. And yeah, just to finish maybe the dollar cat quickly, if you're looking for a reversal trade, that could be one way of doing that, keeping an eye on how the 4-hour chart reacts. If there's any rejection bar here, this, maybe next candle especially, that could be a reversal sign. Let me take a look at how my euro yen is doing. Oh, it didn't enter yet. So let's see. Let me take a look at the pound. In the meantime, again, pound retracing just a bit. I think it should retrace more. Euro dollar still stuck in between these two red lines, and we'll keep an eye on those as the day progresses. So thanks again. Hope to see you in the webinars, and make sure to take a look at Admiral Markets Supreme Edition as well. You saw me use the the calculator here. That's part of Supreme Edition. It's an MT4 add-on with 50 features, and you can calculate the risk easy like that, as you saw. So for more information on that, you can just simply go to admiralmarkets.com, and right at the front page, there's information about this extra kind of addition to MT4, which is called the Supreme Edition. You see it right here at the front. Yeah, there it is. All right, so you can click on find out more. So again, thanks for all your comments, and see you soon. Good trading.